All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for January 4th, 2023. So we'll start with the sniper trade of the day. This one is in Boeing. And again, we're on the 3-minute charts. This blue line is yesterday's close. Here. There was no real gap, and it opened here. That opening range 3 moved as high as here and came down and closed. So we set the OR3 right there, that threshold. That next bar opens and then goes right through the high of the OR3. So we get our entry right here. And we establish our standard risk box. That's the minimum manageable risk box. 1/10 of a range stat, the R10. That starts moving out nicely right from the get-go. And again, our job is right after that initial risk is to figure out how to get our risk out. So as soon as I can move my stop, not to break even, but to no lose plus dinner for 2, then I will have locked in at least this much, this wedge. And then the rest of this is just a science project, conceptually. So that's our entry. Checker hold. So that happens pretty quickly. You can see those first two bars moved out nicely and is continuing to raise up. So, I mean, you wouldn't be wrong to start just locking in pieces of this as you go. A good problem to have. Now, the first time that it even stalls is on that 4th bar where it closed here and then it opened, it ran up, came all the way back and closed at the low of the bar. Then it opened at the low of the bar and started moving up. So as soon as I see that, no matter where I have incremented my stop, I like to get just below that because it has put in a support level and is now starting to move back up. And I really want to see it get higher than that bar's high. If it does that, then I'm going to be really happy. I'll feel like we're okay. But for right now, I would put my stop right here. And that gives you almost 2 full R of gains compared to your risk box here. Okay? So let me redraw that. So I would recommend a stop probably like right there. And this just continues to go. Now you have almost, let's see, 1, 2, 3, 4, 5, 6, 7, 7 bars of almost uninterrupted returns. So I don't mind just kind of using the 1 bar low in this case until such time as the PSAR. I mean, the PSAR has just gotten out of the risk box and the dragon is here. And your 1R stop would be something like this. So to me, because this was so successful, I like to just manually go to a 1 bar low and try to just keep locking in all those extra pieces. Checker hold. You know, if you're on the 2R battle drill, you've got 1 unit of reward, about 2 units of reward. This is about where you'd put your second entry if you're using my brother's sniper technique of the automatic 2R battle drill. And you're getting pretty close to a third one up here because you've got almost 4R in hand. So this one could have been very large. It started to fail. So you had this peak, came back to here, and then could not make a new high. Then this one went briefly higher, and then started to fail, and I just cut it there because I wanted to lock in about 3R, and I felt like I gave it, plenty of room up in here, and all it was doing was just getting volatile and choppy, and that looks like topping behavior. So I wanted to just lock in 3 for the opening trade and be done with it. I then tried the re-entry because what we had was we had this low by the RL10, a nice move up. Then this little bit of weakness could not even penetrate the dragon and get to the PSAR, but reversed up. And that was enough price improvement to establish a new low, a higher low, I should say, in the RL10. So that gives us a rising low. We're still north of the PSAR. So what would we call that entry? The COTA 2 entry. That's correct. So, and we just simply use the standard risk box, which corresponds about to where the PSAR dot is. So that feels like a natural and normal risk box. Okay. I could have been more efficient on this exit, I think. Because that first little run up was so powerful, I kept wanting to give it a chance to continue to go, but it didn't, and it just kind of drifted down. I got the peak of the RL10, it crossed the baby dragon, came through the dragon, so I basically just took that little wedge of a no lose plus dinner for 2, and I ended up giving back that much, which felt a little sloppy. But the reasoning was I wanted it to give it a chance to have another one of those explosive moves. Now it's had 2 periods of look like significant retracement. So on that basis, I went ahead and took this as a supported fall crossing to the downside on the PSAR flip. So I played that as a stop and reverse with the standard risk box here, check or hold. So supported fall crossing to the downside. A little bit of success, but it could not follow through to the downside, which is a positive sign. And by the time the PSAR drifted down, I looked at this as a failure to fail, and I was ready to just take the PSAR flip and go. It's not quite a COTA 2 because it was not a higher low. So I think of this one as a supported spring crossing, because here was the sell-off, the bottom of the RL10, the crossing of the dragon and the PSAR. So I'm entering here with the standard risk box. And up we go. Check or hold. Supported spring crossing. It moves up to about the previous high. This consolidation zone looks a lot like that, but it could not make a new high and rolled off, and now I just took the time exit with the PSAR and locked in about another 1 unit of reward. Check or hold. Now, because it has not shown a sense of urgency in going higher, I play this one as a stop and reverse too. If it's not going to go up, well, maybe it'll go down. So standard risk box. And it times out when the R10 crosses the PSAR. So this failure to fail, I take as a stop and reverse. So now I'm looking to play long with a standard risk box, checker hole. They all look the same leaving the river, leaving the station. It does nothing but scratches out. So now it's getting to be later in the day, and I've really had 1, 2, 3, 4 scratch trades and 1 micro trade, and that just feels like it has found its proper level and doesn't feel like there's much left. So I call that a day in Boeing for about 4R. And as you can see, it doesn't really do much. Doesn't really do much the rest of the day. Although I will note that this little rising low and a very, closing at near the high of the day, that actually feels like a pretty strong signal in Boeing that all is well. So there was no real sense of urgency in giving back or trying to recapture those gains. So this one felt pretty good all day. And that's what our little series looks like. I want to zoom out a little bit to just review our S&P 9-day. So this is the S&P on 9-day bars. So this was that COVID sell-off, and I want you to notice the PSAR flip box, and then how quickly that R10 made a low, and the PSAR flipped again. You will recall, those of you that were with us, that we ended up getting long again right here with the standard risk box, and we're able to ride that all the way to 460 from 300. And that's a plus 50% gain on the first position. You will recall that we had some Kata 2 opportunities all the way back up. And then the PSAR flip box is here, and that protects you against that move. And recently we had another PSAR flip to the upside. This was a strong enough move to flip the PSAR and still have a long bias, although it's having trouble getting any kind of traction in here. But I do want you to notice that in the last 2 9-day periods, we've had rising lows. Notice the lack of volatility in the holiday season, and there has not been any selling pressure. So this thing is still tactically to the long side. It really has to get above this little hump here at about 410 in order to have a nice run at 440, and then about 470, which was the all-time high way back here. So we've still got, I think, a lot of reasons to be optimistic for that move, and we don't have to pay much for that venture, because if it fails below about 380, that's going to tip it back over to the downside. So the 9-bar or the 9-day bars actually are a very, very nice way to get a rapid estimate of market conditions. Check or hold. So if you accelerate that by a factor of 3 and take a look at the 3 days, this is what that latest little retracement from 480, the all-time high, looks like. A series of bigger sells, some attempt at recovery, big sell, an attempt at recovery, sell off. Now I want you to notice that the 3-day bars make it a little easier to see that supporting level around 380. And if this holds, then the 3-day is going to show us a Kata 2 opportunity to the upside. And again, if it breaks above about 407, that thing has a free run up to about 430. So there's leg 1 and leg 2 just waiting to get us to 430. And then if 430 breaks, the move to 460 is a third leg. So there's plenty of reasons to be optimistic on this one. At the same time, we're saying that if it fails below that RL10, you have a clear collapsing dragon, and then you'd put a second position short if that RL10 breaks. So this is a quick look at the 3-day, 9-day sniper, which is a very nice way to manage longer-term swings. It kind of smooths out some of that daily volatility. It's the exact same setup that we're using for the intradays on the 3 minutes and the 30 minutes. And the reason is you get very fractal type behaviors. Look at how nice and orderly these long trends are with the PSAR. So, powerful tool. Here's our, now we're going to drill back down to the daily charts. Here's the 150-day look back to here. So that's 150 days. There's the low. There's the high. Here's our 30-day box. 10-day. 5-day. You can notice that volatility is pretty large. And then this is our 1-day range in that yellow box. So we're about in the bottom. We're about at the 40-yard line. If this was 0 and that was 100, we're right around the 40, kind of in the middle of the field, ready for a breakout in either direction. It has to break below 375 to be significant downside. It has to break, I would say, above 390 to commence that nice run up to 406. So compound critical state, we have moved a nice chunk off of that low. Leg 1, leg 2, and then leg 1 down. So this is a nice critical state. What's it going to do after the holidays? Which way does it break? And there's an argument in both directions. Now looking at zooming in on the 30 days. So here's our 30-day look back. These are all daily bars. There's our 10-day, our 5-day box, and the 1-day box. Now you can see that the dragon has actually started to curl back up. And there's our swing low in the RL10 at about 377. 10-day low at 375. A relatively large range day today compared to the tiny little ranges we were seeing during the holidays. So a breakout is instantly long. A breakdown from here is instantly short. I'm treating that whole yellow zone as a critical state and ready to trade. Now zooming inside on 30 minutes, now we're looking at the intraday. This was today's range box. So now you can see the size of the 1-day range compared to the 5-day range and the 10-day range. This is that entire holiday period. Not much volatility at all. And now we're starting to see a little bit of expansion. So the traders are coming back. And this one feels like trying to make a Kata 2. So if this holds and that holds and it breaks out above, call that 385, then that's going to be a very strong signal to the upside. And it breaks out of this whole trading range. And then it should make a nice run up to 403 in a hurry. So looking forward towards that. And framing the trade in both directions as usual. All right, let's take a look at the sector. Let's take a look at the sector performance today. Here's our baseline of the S&P at plus 0.77. The Qs and diamonds were the weakest at 0.48 and 0.4. Then the Russell was a little better at 1.25. Treasuries still strong, 1.37, and emerging markets were the best big index at plus 3%. So a pretty strong day across the board. The sectors that worked are marked off in green. You get Bitcoin at 1%, lithium at 1.3. Then this nice big cluster here of wood, consumer discretionary, finance, the other lumber, cut, Brazil, materials, biotech, residential real estate, and Mexico is now up to 2.4. Then the next cluster here, commercial real estate, 3%. Marijuana, clean energy, precious metals, 3.4%. ARC Genomics, 3.7. ARC Innovation, 4.3. The best performer today, Ethereum, 12.2%. Tesla, very strong day for second one, 5%. Closing at 113. Still not out of the woods yet. Individual companies that did well. We'll take a look at our semiconductors here first. There's Texas Instruments, Intel, and NVIDIA, 3.65 and all the way down to 3%. Then our three metals. 2 out of the 3 were better than the S&P, so here's our metals. U.S. Steel at 0.76, Alcoa 1.23, the strongest metal of the day, Cliff Natural Resources 2.44. Other individual targets that did well, Coinbase 12%, Boeing and PayPal 4.2, Robinhood, Squarespace, Devon Energy, the energy company we like, 1.34. Apple slightly better than the S&P at 1%. So a pretty broad array of strength in the marketplace today. The underperformers, let's take a look at them. Again, the S&P, our baseline, 0.77. So the FANGs were up only 0.58. Then the nice big cluster here of consumer staples, oil exploration, the Aussie-US dollar pair, uranium, tech, silver, agriculture, commodities, and the VIX between 0.4 and minus 2.7. Here's where the cut line between winners and losers was. Oil was worst at minus 5%, and Microsoft got smacked in the mouth at minus 4.37. That looks like an opportunity to buy strength on sale once it bottoms out and starts recovering. Let's take a look at the traders, see how they did today. All right, Tim, working on Apple. Now here's his OR3. He gets the long, cuts it short, waits for it to come through the dragon to get the short. Quick loss, quick reversal for a winning trade. Both of his efforts to go short and then long scratched out, and then he finally gets back on board here and here to recover for the day. So, I mean, I think those are reasonable shots right there. You know, if that one fails, you're expecting it to come down to here, so that's worth a shot. And if that one works, you're expecting it to at least get to here, which it eventually did. It just got a little choppy in the middle. In Tesla, he was looking at Apple, so he did not get the OR3 entry to the long side, nor to the short side. He does take the PSAR flip here, cuts it a little short, so he does take the loss. The re-entry was good. He gets paid, gets paid. I like that effort on the short. This little effort here rejected the previous high, and so that feels like there's an opportunity to fill. So I like that, but I also like the stop and reverse for a scratch, basically, on Tesla. Here's Satya on Coinbase. He found the mover today using a 3-minute bar. And here was the OR3. Did not take that. But after crosses a baby dragon and he gets an MMRB off, he front runs the short on a 1-2-3 entry, gets paid once and twice, sees the Kata 2, hits the PSAR flip, gets a really nice pay, and then when it doesn't fail, re-enters, gets paid, PSAR flip gets paid, PSAR flip gets paid. So he's taking those little snacks and shots as he goes. Finally registers a loss, but pays for it, then gets paid and gets paid. So a pretty nice day for plus 5R. Here's Woj. This is Brazil. The OR3 entry quickly fails, but then he lets the stop and reverse. I think he lets it get back. I would like to see you capture enough on this move to pay for that one. That'll help your psychology. Then you can take this PSAR flip here instead of here. Then that would have paid instead of failing. But he keeps firing. There's a Kata 2, and that one pays off nicely. On this one, I'd like to see you, instead of giving back half, I'd like to see you keep an extra half, like at about a 1-bar low on that one. But 0.4 on Brazil, I think we gave back too much on our winners. Pretty good risk management on the losing trades, but the winners, we did not respect the gift enough. Boeing, he caught that early mover, got paid nicely on 2 legs, and then got chopped a little bit. 4.6 on the Boeing trade. Pretty good day at work. Picked up 3 in Devon when the big trade finally kind of uncoiled and started moving. He got a couple quick shots inside here. 1 loser, 1 winner. And netted 3 in Devon. Tesla got a little too excitable on this entry. Chopped around a little bit in here. -2. His effort in U.S. Steel was slow to get the recovery. He took the 1R loss here, chopped around a little for -0.7, -0.9 in Apple, which was very hard. That was really choppy. But he does net 4.5 overall for the day, so a pretty good day at work. He's definitely improvement on the span of control. That's looking good. Shifting to the daily report. We'll go to dashboard number 1. Just a reminder, we are in bearish normal. The last couple days have been moderately improving. Volatility is still in risk on, which supports a move up or a surprise move to the downside. Tesla and Microsoft are still the leading candidates for weakness in the stocks in Brazil, and oil exploration, weakness in the ETFs. Dow Tactical Summary had some very strong moves today in Boeing. That was decisive. And American Express had a little bump today. Also, Nike, big day, and Verizon, a big day. So the winners continue to win. Only two symbols on the auto framer. You got Apple at 2-1 and Tesla still 5.7-1 on the swing. That's how far down it failed. So plenty of room for recovery in Tesla even after these nice couple days. In the ETFs, handful of dojis again. No other swing signals. The auto framer showing 3.3-1 for Brazil, 2.2 for Latin America, 2.9 for oil. Gold had another strong up day, and a couple breakouts on the 10-day range as well. Kind of business as normal. The auto framer and squeezes, today's range was large enough that there's zero squeezes. So we're starting to get that engine cranked up and trading coming back to the floor. So let's be ready for a big day tomorrow. Looking at sniper targets, 3 Godzillas in the S&P 500, 4 in the tactical symbol set, all of them stealth because of the abnormal volatility. Still dramatically oversold on the weekly and the daily charts. So the combination of that weakness plus abnormal volatility on the 5-day is what gets you the Godzilla. Standard stats on the 1-day movers, half a dozen of them had better than 2-1 or better 2 sigma to the upside. Big 1-day movers. And a handful of double volatile symbols here in the S&P. Archer Daniels, Midland, and GE are especially interesting. Four Seasons of MACD being dominated by the spring and a little bit of recovery. That's a favorable sign. I like the volatility in Brazil here. Still early days in this Godzilla type move. And I like Microsoft and Tesla for their oversold conditions. Multi-time frame NDX tells the story of a pretty broad array of strength. Note Boeing continues to be the winner, along with Nike, the longer term. Gold is doing really well. Emerging markets are doing really well. And treasuries seem to be coming out of their funk. Real weakness in oil. For you energy traders out there. All right, that's everything we got for today. Let's look at the trading value list, the new one here. Again, we're looking for a combination of consistency of daily moves, which gets measured by high frog quality numbers. And then we're also looking for absolute large daily range percentages. So we want high average range percentage, which gets measured by this column. So multiplying the range percentage times the frog quality number gives you this trading value ratio, and then we sort by that from highest to lowest. And so that makes the top 10 the most consistently large range moves from the last 10 days. So there's some really good traders in there. Tesla, Clean Energy, Alcoa, Brazil, Apple, Boeing. That's telling you what the best active traders are right now, given the last couple weeks of price action. All right, so that's a pretty dynamic list and very useful. All right, that's everything we got for you. Well, take good care, and we shall see you in the chat room tomorrow.